Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
What's up, everybody? Dave Bartosiak here, kicking off 2025 with a top stock pick of the week. It's going to be me and my boss, Shiraz Mian, let you know what we've got in store for you. I'm going to kick things off with NCNO, ticker NCNO. Zacks rank number one, strong buy. Technically, they are in the internet software industry, which ranks in the top 8% of our Zacks industry rank. I say technically because, well, they are. I mean, there's a cloud-based software company. They specialize in software for financial institutions. So you get a little bit of fintech in here. Loving our new quote page on Zacks.com. Why? Well, if you know me, you know that I love the price consensus and EPS surprise chart. So these multicolored lines correspond to the left y-axis and represent the evolution of Zacks consensus estimates over time. I love it so much because you can glean so much information from a single chart. You can see, okay, have we been under-promising and over-delivering? That has been the case here. Estimates start low and go up. Hasn't always been the case, but since about mid-2023, the ship has been righted. And that's what you want to see in a company, okay? Managing analyst expectations and delivering for investors. So that's what you have here since then. Also, take a look at the string of beats. Just a ton of beats. They haven't missed since early 2021. So, and again, you have this clear delineation between a period of time where it just wasn't delivering to when the rubber met the road, and all of a sudden we are rocking and rolling. So definitely what I like to see. You see the growth. That's the space between these lines. So this is growth from one year to the next. And that growth continues. And it looks to be accelerating into 2026. So that's great. Then if you scroll down here, we've got our Zacks rank factors of agreement, magnitude, upside, and surprise. Check out the magnitude here. So this is where you can see in plain numbers the evolution of that Zacks consensus estimate. Fiscal year, current year, going from 67 cents to 72 cents, while next year's number's up from 85 cents to 87 cents. So moving in the right direction there, okay? Definitely what you want to see. Here, you could also compare NCNO to the industry and a couple other stocks within that industry, and you could do it on a variety of metrics. We can use the value scorecard, which gives us things like the VGM score, the cash price. Of course, you're going to have that on all of these, but you're also going to get, your PE. Obviously, well, this one is a little bit rich here at 47 times. That's richer than the industry average, as well as a couple other names. But remember, these are, Arlo is a online security company. So the industry is a little bit vague on this one. So you can take a look at that. Take a look at growth here also. So here you see projected EPS growth next year, 43%. That's better than the industry average, of course. And you can see return on equity and all types of different facts and stats there. And then if you look at momentum, this shows you what the price change has been over the last, 1 week, 4 weeks, 12 weeks, and the last year, along with daily volumes or things like that. So you get a lot of information from a quick little one-pager here on our new quote page. So I definitely like that. But I'm still old school, so I do like to look at our detailed earnings page because this helps blow up what I was talking about before, okay? Give it to you in a little different format. You do see the last EPS surprise of 31%. There is a positive earnings ESP heading into this quarter's earnings. And here you get a little bit more detail in terms of sales. So we have 13% revenue growth current year, accelerating to 14.59 next year, 44% EPS growth, slowing down to 21%. But remember, if you're coming off of a much lower number, in this case, we are coming off from 50 cents to 72 cents, these numbers are going to skew a little bit. So we do like that. And you could also see the sheer number and volume of analysts that are upping the ante. So for the current year, you have 6 analysts that have increased their earnings estimate for the current year. 4 have done so for next year, while 2 have actually dropped for next year. But still, like I touched on before, you have the overall positive impact to our Zacks consensus estimate. So there you have it, folks. That is my top stock pick of the week, NCNO. So, boss, Mr. Shiraz Mian, what do you have for us, my friend?
Thanks, David. The stock I'm featuring today is Fresh Pet, ticker FRPT. Full disclosure, I had the stock in the Zacks top 10 portfolio last year, and it was a great performer for us. And I believe the momentum continues in 2025. I have put together a couple of slides that I want to share with you. The first one here compares Fresh Pet relative to the S&P 500, which is the red line, and the Zacks consumer discretionary sector. Now, officially, we have Fresh Pet placed in the Zacks consumer staples sector, but it was just for illustrative purposes here. As you all know, the staples didn't really do that well last year either. The point here is the reason I put it in discretionary is this Fresh Pet as a relatively higher price point refrigerated pet food supplier targeting higher income households. In my judgment, made more sense to put it as a discretionary players. But in any case, you could see over the past year, it has been a stellar performer. And you would intuitively feel that having done this good, why should there be further upside and how expensive it must be? It isn't cheap. It's a premium valuation stock. Here I have the stock relative to its own history over the last 5 years on an enterprise value to forward 12-month EBITDA basis. As you could see, it's fairly rich, though it has, over this period, traded significantly higher. It's trading below its 5-year median. But in any case, it's a richly valued stock. What this slide is showing is the revisions trend. And what I mean by that is how the Zacks consensus estimate for 2025 has evolved over the past 12 months. We have 8 estimates from 8 sell-side analysts in our database. As you could see, a year ago, the consensus of those 8 analysts was for 27 cents in EPS in 2025. And you could see that's 150 today. And I'm very confident that the trend line we are seeing here very much remains in place over the coming months and quarters. And as estimates go up, that give you a fundamental justification for the stock price to continue heading higher either. This is a more visual representation of what I shared over in the previous slide. These squiggly lines on the chart represent the evolution of annual consensus estimates. The red line here is for 2026. The light blue line here is what I shared in the previous slide is for 2025. Dark blue here, it's a little confusing because the stock price that's gone up and went down and is now, that is also blue. The green is at 23 and the orange is 22. As you could see, the stock really went up in 21, tanked through 22 and early 23, and then it has been on an uptrend. And as I noted, the revisions trend should give you the confidence that the stock price momentum that we saw last year totally continues this year. Just to sum it up, it's a differentiated fresh pet food player that enjoys very strong and sustainable competitive advantages, strong growth profile, as I mentioned, revenue growth, 24.4% in 2025, or $1.2 billion in revenues in 2025, which is 24.4% above 2024 levels, and then another 24% growth in 2026. And most analysts covering the stock are projecting mid to high double-digit top line and bottom line growth top line growth, in particular, the bottom line growth is much higher for the foreseeable future. So a very strong growth momentum in the stock. The drivers for those growth include increasing household penetration. So pets are in every household, and the more usage of fresh pets, refrigerated, you all may have seen that in the supermarkets and other retail establishments. New product launches, if you go to a company's website and the company's corporate presentation, they talk about a host of new products, and then international opportunities. So these drivers are the reason why I'm confident in the sustainability of the growth momentum. Scale economies in manufacturing and distribution to drive significant margin gains. The company wasn't profitable till last year. It was spending heavily in that business infrastructure, manufacturing and distribution, and we see the momentum in earnings now. Strong revision strength shows analysts' inability to come to grips with the company's enormous earnings power. And I think that is the fundamental support. All growth companies are, in a way, momentum companies and momentum stocks as well. But I like Freshpet purely on fundamental grounds. As I noted earlier, was in my top 10 portfolio last year, and I still like it a lot. That's it for this week, folks. See you guys next time.